Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey, good morning, everyone.
Good morning, real estate investors, and welcome to the Canadian Real Estate Investing Morning Show. I am Wayne Hillier, and this is my wife, Gabby, and we broadcast this show live every weekday morning for you guys, for real estate investors across Canada, providing you free education and free coaching for anything it is that you need to know about real estate investing. On today's show, what we're going to be doing is we're going to be reading a listener email. A real estate investor in Canada reached out, sent us an email with a question. And what they want to know about is if I'm a little bit short, hypothetically, if I'm short on money for a down payment to close on a property, how do I go about doing this? So this person has a friend who has some money, but they're just not sure how to go about structuring this, how to go about structuring it legally, how to go about structuring it properly to make sure that it's win-win, to make sure that it's profitable for the listener, but it's also profitable and safe for their friend as well. So we're going to be going through that email, and then I'm going to be going through a series of questions that need to be asked and answered before this question could be answered as well. But I've got a really good answer for this listener to help them take the next couple steps in order to figuring out how to go about structuring a deal like this.
Yeah. I love when these kind of questions come in where it's like, here's my situation. Like, what should I do? I know that I have a couple options, but help me figure it out, because there's so many new investors who come in and either they just don't know and they wing it, or maybe they ask internet groups and get so many crazy answers.
Don't do that.
Or they just don't take action because they get overwhelmed. So I love when we can get precise questions like this that come in and we can say, okay, here are your considerations. Here's what you need to think about. And ultimately, you need to make the decision, but here's some pretty great guided advice.
And that's what this podcast is all about. This is why we started this podcast, was to help real estate investors.
Yes.
There's tons of, pardon me. There are tons of podcasts out there where they have lots of guests on. They talk about all the cool things that they've done, and I could wow you with all the cool stuff that we've done as well. But how does that help you? You know what I mean? Are you just sitting there driving to work, brushing your teeth, listening, and just like in awe of what other people are doing? Or can we start really focusing on what it is that you're doing? How do we help you? And that's how this podcast provides as much value as it does, is because we're focused on you. We're not focused on us. We're not focused on the people that we have on the show to get more views and more sponsorships. We're focused on you guys. How can we help support you guys? And that starts with you. It starts with you. Yeah. You have to wake up in the morning. You have to join us live on YouTube. You have to bring your questions. You have to figure out what is stopping me right now from doing what I need to do, and what types of questions do I need to get answered in order to take that next step. So hats off to this investor. Now, they couldn't make it live to the show on YouTube, but they said the next best thing I can do is I can email my question in, which is great.
Yeah.
It's totally great. Right? So hats off to you for taking the initiative to finally getting to an answer, finally getting to a point where you can take the next step. And we love helping. Please. It makes our show so much easier too. Yeah. Because we don't like talking about us all the time. We got lots of things to talk about. We can talk your ear off about all the things that we're doing, but what I want from the show, and from how long have we been doing the show now?
Many years.
Got to be over 1,300 episodes now. Yeah. I have to double check.
Yeah.
1,300 episodes. What I love the most from doing the show is when people reach out and say, hey, I've been listening for a long time. Just want to let you know that I just bought my first property.
Yeah.
You know what I mean? Or, hey, I finally got that first property. Thank you so much for answering that question for me. It was you guys that helped me do that. So that's what this is all about. Yeah. Okay.
I agree. I don't like coming here and just strictly talking about what we have going on. I think that when we go back to the purpose of the podcast, it is to help people. And I every once in a while I think about the eventuality of this podcast not existing anymore. I'm not talking about like near future or anything like that, but the eventuality that one day this won't exist. And when that day comes, it's like, what will that mean I think about all the people that we've helped and all the
Yeah.
people who now are sitting here with a portfolio and who did get their questions answered and stuff. And then it's like, there comes times when all we're talking about is, oh, okay, this is what we have going on and this is what we have going on. And we go through those spells of where, the questions aren't really coming in. And it's like, when stuff like this really great question comes in, it's like, I know that we're helping somebody directly. I know that we are giving somebody the ability to move forward and purchase the property and build upon a portfolio in their future. And that's why we're here. That's why we started to come here. And that's why we want to continue to show up every day. So we need more of this to come in so that we can keep feeling like we are fulfilling the purpose of why we're here, right?
Yeah, so through the pandemic, I think it was 2021, we started the Real Estate Investing Masters program.
Yeah.
So REI Masters was started, and that was after years of me doing one-on-one coaching. But I realized that one-on-one coaching, the format that I was using was not working. And though I was able to help so many people through answering questions, through analyzing deals, through going through contracts and troubleshooting and things like that, putting creative, structures together, corporate structures, seller financing structures, all those things. That's my expertise, right? Been doing it for a very long time.
Yeah.
But what I found is that every time someone had a question about something, or anytime anybody had an idea about something, I'd always have to be like, well, you got to go take this course. Well, you got to go take this course. You got to go take this course. So we started the Real Estate Investing Masters Mentorship Program, which is a fully one-stop shop for everything that you would possibly need. So that, so many people will be like, well, I don't know if I should take this program or I should take this program. This one over here does fix and flips. This one over here does rent to owns. So I think I'm going to be doing fix and flips in the future, I'll probably do that one. But I also think I might want to do multifamily later. I don't know. So there's so many programs out there that are very niched. And what that does is that you go down one particular, avenue, but then what happens when you need an answer to this, or what happens when you need a resource for this? Our program covers everything. Our program covers you. It doesn't cover one specific strategy. We've done all the strategies. We've done all of them, except for short-term rentals. I think they're baloney. But anyways, that's a topic for another day. But we've done all of them, so we can literally teach all of them. And we have courses for everything. So that way, what we can really do is have a non-bias, approach to this. Be like, okay, who are you? What do you have? And what do you want? And then we can kind of reverse engineer things. And be like, okay, if this is the goal that you're trying to get to, these are the strategies, and this is the different types of deals you should be doing to get to that in the most efficient and productive way, based on your resources, based on your life and your lifestyle, right? So that's what the REI Masters Mentorship Program is all about. It's not, there's no bias. I have favorite strategies, but my favorite strategies are based on my life and my experiences and where I am in my life. It might not be the same thing for you. So we built the REI Masters Mentorship Program, and it's been working fantastic. We've had over 100 students over the last 4 or 5 years. I think we got to be well over 150 students now that we've helped, and to help them build massive portfolios, help them, get started on their journey, towards their long-term goals. And I'm really happy about it. But then it was through that, we also realized that oh crap, now we've created this, and I'm not afraid to say it, we've created this expensive program. It's expensive, a $15,000 program to work with us for 12 months to help you, guide you through and the value is there. The problem is that not everybody is there. Not everybody is there yet where they're ready for coaching, where they're ready to take it. And so they might not see the value in it yet. And so we had all these people that could see that wow, Wayne and Gabby can help me, but oh God, I can't afford that. Or, oh God, I'm just not ready for that yet. I'm not ready to go all in. So that's why the podcast kind of fills that void. So what we teach everybody, and anybody that reaches out to us asks about, hey, I want to join your mentorship program. I'm like, whoa, pump the brakes. How long have you been listening to our podcast? Oh, I just started listening the other day. Go listen for 3 to 6 months, then tell me if you want to join our mentorship program. Because you're going to learn really quickly who Wayne and Gabby are. And I think if you're going to spend $15,000 on your education and coaching to take it to the next level, you better really have a good understanding of who these people are, right? And there's so many other programs out there that you don't get that luxury. It's almost like they look really cool. I saw them on stage. They're really exciting. Everybody else was doing it, so I should do it. But if you're going to spend that kind of money, you're going to make that kind of investment into yourself and into your business, you better know that I'm going to get the solution to my problem. Mm-hmm. I'm going to get the result or the outcome that I'm looking for. And that's just being a good investor. I'm literally teaching you on day one how to be a good investor. If you're going to invest into something, it better get the result that you're looking for, right? So I'm literally teaching you on day one, even before you even, send me $1, go and research us first. Are these guys legit? And you can hear us talking for months about all the different things that we're doing, all the different things our students are doing, all the successes we have, our program has, and everything else, and the legitimacy of the things that we're doing. You can go and fact check it, right? And then from that point on, if you think that these guys are right for me, these guys are going to help me get the results and the outcomes that I want, then great, right? And if you don't want to join our program, mazel tov, fantastic. Continue to keep listening to our podcast. Take advantage of it. You're going to learn so many different things. We're going to be talking about raising money today and structuring partnerships and loans. We're going to be talking about that today for free. This is stuff that they teach in a course in other places. You're going to have to pay hundreds of dollars to get this information somewhere else. We're going to teach it for free today. And you have the opportunity, if you're joining us live on YouTube, you can even ask questions live with us, and I'll answer those questions for you. Yeah. And if you have more questions because you're driving home from work today at 4 p.m. and you're like, oh shit, this is awesome, I want to learn more about it, you can send us an email and you can ask us additional questions. We'll keep talking about it tomorrow. We're here every weekday morning at 7 a.m. Mountain Time on YouTube for you guys for free, right? So I want you guys to know that there are free options, there are paid options, anything that you guys need, we are here for you. We put on live events too. We got some great events coming up in 2 weeks. We got another one coming next month. We have another one coming in September. You can come and see us. You can come and meet us. You can book one-on-ones if you really want to, but there is no excuses for you. There are no excuses for you. The resources are there. Paid and free, the resources are there. But like I said earlier, it comes down to you guys. What are you doing? First thing you got to do is you got to figure out what is preventing me from taking the next step, and what types of questions do I need answered in order to take that step, in order to take that next step into growing my wealth, into reaching my definition of financial freedom, to being able to provide the life for my family that I never had, right? Or for my future family. So many people that we have are actually in their 20s and they're actually like, oh, I'm not ready for a family yet, but I want to get my shit straight before I have a family. I'm like, fuck yeah, that's exactly what I did. Yeah. It's exactly what I did. I'm like, I'm not ready. My shit's not straight yet. I'm not ready to have kids, right? So I love that. Wherever it is, wherever you are, first, figure out what it is that's preventing you from moving forward. Second, figure out the questions that I need answered. Third, bring them here. Allow us to help you. Mm-hmm. We're still young enough that we understand young people problems, but we're old enough and wise enough to have experienced other things as well, so that we're not completely naive. Mm-hmm. I think that we are in our sweet spot. We are in our prime. Mm-hmm. Right at that 40, I say our average age is 40. Would you say if we took a weighted average of our ages?
I believe that's true. Yes,
our weighted average of our age is 40. We are right at that sweet spot, right? Yeah. Between the 20-year-olds and the 6-year-olds. So we have so much to offer for you guys, and we want to share everything. All you got to do is just tell us what it is specifically that you need to know, and we will provide that for you. Yeah. Cool. So we do have a couple fun things coming up this week, though. We're going to talk about ourselves. Guess what? We're taking possession of a new property. I just looked at my calendar. We're taking possession of a new property on Thursday. Yeah. Another cash flowing property?
Another cash flowing property. Yeah. Very exciting. It's always a little bit of a hustle leading up to it, but I'm stoked, and I'm stoked for also our joint venture partner. Mm-hmm. Yeah. So should be a good week. And also it's like on key release day, it's like, okay, what do we need to do?
There is normally, I think I said this on Friday's show, there is normally like a laundry list of things that needs to get done when you take possession of a property. I don't think we've ever bought a property and there wasn't like $1,500 to $3,000 worth of little stuff that needs to get done, right?
Yeah, and I mean at absolute minimum, even if there's no repairs, there's always going to be like sending in a cleaner, getting the furnace and ducts cleaned, And usually like sending in the lawn crew to tidy things up and to make sure that it's just maintained until you find a tenant, right?
So getting it ready.
Yeah.
So maintaining the property while it's vacant, but also getting it ready for the tenant that's going to be moving in eventually.
Yeah, absolutely. So there's always at least those expenses.
That's $1,000 right there.
Exactly. If not adding in some minor repairs or maybe some like in the case I'd say of the properties that we've picked up recently, quite a big list of repairs.
Yeah.
Right. So
we do have a big laundry list, but we just went to one of our properties, and I think I know the one you're talking. This is the last one we checked out on Friday.
I don't even know when we were there. Oh yeah, Friday.
And there was some minor stuff like the shower heads leaking.
Yeah.
That's not like a tear the whole wall out thing. That's just hey, we need some more sealant or some seal. What do you call it? The tape, plumbing tape.
Yeah.
You know what I mean on the shower head. The overflow valve cover is upside down. Well, you take a Phillips, loosen it and turn it and then tighten it.
Yeah.
Like, this is minor stuff. All 4 out of the 5 sinks, I think it was 3 out of 4 sinks or whatever it was, were leaking.
Yeah.
Okay, cool. Send the plumber in for 2 hours, and he goes and figures out where the leak's coming from.
This one is actually interesting because normally it's like, okay, here's our handyman list. It's like, and then it's like, oh, okay, we also need a plumber to like fix that leak. But this one was actually like, okay, here's for the plumber, and like, is this worth sending a handyman for these couple other things? Well, we need somebody, so yeah okay. So it's kind of like reverse from what we're used to, the list of stuff that comes up. But it should be pretty simple. I'd say like a day of sending a couple people in and then it'll be ready, which is fantastic. I love those kind of lists.
Turnkey, baby. This is what we love and this is what we recommend for everybody. I said earlier, like I have my own preference. I have my own, types of deals that I like to do and strategies I like to do. Don't get me wrong. I love the cool creative strategies and I've used them. And I've capitalized and leveraged them when I needed to early on. But where we're at right now and the stage, we are in life and the stage we are in our business and our portfolio, easy peasy,
lemon squeezy.
Cash flowing buy and hold properties, if you know how to find them like we do, are just so simple. And I'm not going to talk about the details of this deal. Maybe later this week we can talk about the details of it. But this is another one of those ones that's cash flows at least $500 a month. Easy. Yeah. Super simple. It's another 3-bedroom Edmonton townhouse. Yes, it's got condo fees. Yes, it's possible. Yeah. We've been talking about it lots this week. And yet some people are still like, it's not possible. I'm like, go listen to there's dozens of hours of podcasts that we've done that literally explain it. I'm not going to sit here and explain it to you again. But it's possible, guys. They're out there, and we can teach you how to do those things. But another one of those properties that cash flows, I can't remember exactly how much. It's probably somewhere in the range of about $500 positive cash flow on a very small investment. And we did that utilizing partnerships, which kind of leads into today's question that came in from a listener. Because, we've been utilizing partnerships, joint venture partnerships in our portfolio over 10 years now.
Oh, yeah.
Well over 10 years now. And we tried to do it all on our own in the beginning. Tried. And I had all the same, reasons for you guys have. I don't want to give up half of my profits. I don't like anybody else being in my business. I want to be in total control. I don't want this. I don't want that. Yeah, I said the exact same things. Right? And I'm not trying to be like dad here. You know what I mean? We're like, yeah, we all said that, but then we did it. Yeah, we everybody says it. And it makes sense. All of those things are legitimate. I don't think you should ever bring in partners unless you absolutely have to. So here's me saying it. You do absolutely have to, because they are inevitable. And if you want to scale your portfolio, you're going to need to. So we've been utilizing joint venture partnerships for well over 10 years now. And we've been doing really well with it. And, the question that came in today was like, hey, how do I think I'm going to use this person's money because I need to, but should I be doing it through the form of like a loan, or should I be doing it through the form of like a partnership, and what things do I need to consider? And so on this deal that we did a partnership, and it is a 50-50 partnership. And this investor brought all of the money, the down payment, the money for the initial reserve fund to get the reserve fund started, and then any of the additional closing costs and repairs immediately. So all of that money that they put in gets plopped right here as their initial contribution, their initial investment, and that gets written down, and they get that money back first. Okay, so that's their contribution. Our contribution is they did that in the mortgage. They brought that and the mortgage. Our contribution is the deal, organizing it all, putting it all together, structuring it, bringing the whole power team that we have of everybody involved, and then seeing the whole deal all the way through until the end. So we take care of everything. And they partner with us and give us 50% of the profits for our expertise. Yeah. That assurance of knowing that Wayne and Gabby got this. I know that I don't have to play around with my first deal or my third deal or whatever and mess it all up. These guys know what they're talking about. These guys are going to provide me that assurance of that profit, that it's going to be profitable. That almost guarantee. You can't guarantee things, but that almost guarantee of knowing that. And we've been doing that with dozens of real estate investors throughout the last 10 plus years successfully. Never, ever, ever messed up at all because we know what we're doing. And that's why I think joint venture partnerships are so great, because it's great for us as investors to be able to scale our portfolio, but it's also great for our investor money partners because they're too busy. They don't understand it. They don't have the time to be able to and energy to be able to put into the education and learning all of these things, nor do they have the luxury of buying experience. You can't buy experience, right? So they get to know and have that assurance by partnering with us. So it's win-win. Right? I'm a huge fan of partnerships. This partnership that we're doing right now on this deal, fantastic. It is, and our partners, it's a perfect win-win. It's exactly what they were looking for.
Yeah, 100%. And I was just thinking about this because, in this situation, they actually came to us and I want to partner with you. Yeah. And so automatically you can see that that's win-win. They know what value we bring. We know the value that they bring, and it's just like a beautiful marriage of this is exactly what everybody wants. So it's there. But then you look at the other side of it where sometimes you have investors who are like, okay, I need partnerships. I can't do this on my own. I don't have the resources. But for whatever reason, they can't get over this mental block of feeling like when they're trying to attract joint venture partners that they're somehow manipulating people to work with them or taking advantage of people and their resources. But if you just look at it from this perspective of okay, if people could just already see my value and come to me, how come that's a win-win? But you showing people that it's a possibility, all of a sudden, you're taking advantage of people. It's it's a mindset shift that you need to take on, because a joint venture partnership is the pooling of two people's resources to build something that benefits both of you. Yeah. So it is this beautiful win-win situation for everybody where everybody gets to be elevated, right? So I love it. I think it's fantastic. I've seen us doing it and how all of these people that we've helped, but also they've helped
students,
us. Yeah. No, our partners.
Oh, our partners, gotcha.
Yeah. They've helped us. We've helped them. It's it's very cool.
Yeah.
Huge fan.
All right. So let's get into this investor listener's email. We're going to take a quick little commercial break. When we come back, we'll read the email and we'll start dissecting it to try and figure out what's the best approach for you for your particular situation. We'll be right back.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan in the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shoved macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty, opportunity doesn't take time off.
Okay, and we are back. And I didn't mention it earlier, but I should say it just in case anyone is interested. If you guys want to learn more about joint ventures, partnerships, or working with us in the REI Masters Mentorship Program, sorry, it's not my sweater, then just go to www.reimasters.ca. And there's a link to book a discovery call. You can book a call with me, and I will have a phone call with you to determine whether it's right for you. Very likely, if you're very new to this, I'm probably going to tell you to listen to the podcast first. As I mentioned earlier, I'm going to tell you to listen to it because you're going to learn so much. And to be honest with you, I want you to learn a little bit of the fundamentals through the podcast first anyways, before we jump right into it. Otherwise, I just don't want to waste your time or your money, right? So I just want to be cool and transparent with that. But go to www.reimasters.ca. And as well, I didn't say that if you guys are three things. On the website, go to events in the tab there. You'll see all the events that we have coming up. Mm-hmm. We got a great event coming up on July 25th, the Edmonton Garden Suites 101 in Edmonton. Lastly, what was my third thing? I missed a bunch of things this morning. Sorry. If you guys want to continue to keep joining us and you want to join us live on YouTube, all you need to do is join in on YouTube at 7 a.m. Mountain Time every weekday morning. Just search up the Canadian Real Estate Investing Morning Show or Wayne Hillier. You'll find my channel. 7 a.m. Click. You'll see that it's live. And we got some great live listeners here. Good morning to all you guys. Okay, now let's get into today's topic.
Okay, so we had a listener write into the show, and the email says, I am working on a deal and I don't have all the down payment money to close. I have a friend that has some money, but I need some guidance on how to proceed. Should I borrow his money on a loan and pay him interest? Or should I partner with my friend? My major concern is I don't want to give up 50% of my profits.
Classic.
Very classic.
Very classic. And again, as I mentioned earlier, I completely understand. Mm-hmm. I completely understand. And I'll even give you, a little bit of assurance through math as well, so that we can kind of see that. Because I'm sure maybe you've kind of run the math already, but it's going to come down to how do I get the most profits out of this? But also you do need to consider risk as well. How does doing either of those increase or decrease my risk in this deal? And we measure risk. And if you listen to the podcast long enough, you know this. We measure risk by how much cash flow, right? And if you want to learn how much cash flow is sufficient for any given rental property, go and pick up my book. It's called The 5% Rule, a cash flow test for Canadian real estate investors. You can find it on Amazon, okay? That'll teach you about the 5% rule and how much cash flow is enough cash flow. But you do want to take into consider risk as well, because, looking at the situation, you're talking about a loan and paying them interest, or you're talking about a partnership. And so in which one am I obligated to send cash flow, or am I obligated to send payments every month? So I have like 10 questions that I would normally ask this individual. So if you booked a one-on-one coaching call with me, and you can do that through the website. If you were in our mentorship program and you brought this to a coaching session, I would have about probably 10 plus questions to ask you in order to figure out which one is right. Now, as a experienced real estate investor and as an experienced coach, I already kind of know the answer, but I'll give it the benefit of the doubt. And I want to ask these 10 questions because these 10 questions are going to really help me figure out for you individually, does a partnership make more sense or does a loan agreement make more sense? Right? And as I mentioned earlier in the show, it really doesn't, there's no cookie cutter approach for everybody. Everybody has different goals. Everybody has different resources. And we're trying to figure out how do we get you from where you are today to where you want to be in the future. And so that requires a unique approach, a tailored approach for everyone individually, right? So I'm going to ask these questions. The first part I want to ask about is the loan. If you were to go about doing a loan with your friend, the first question I need to ask is, how is this loan going to be secured?
Right.
How is your friend's position? I got to be careful with my terms here, because if it's a new investor, I want to be careful not to confuse you. The proper term is, how is their interest secured? Meaning their personal interest. How is their personal interest secured? Not the interest that you're charging them, but how is their personal interest secured? Meaning that in the event that you default on your loan, how are they secured? What collateral is there? So we want to make sure, how is this loan secured? That's very important. I need to know the answer to that question. That's the first thing you got to figure out.
Wayne, and that one's really protecting the money partners, or the person loaning it. That's the lender. That's protecting them. That question, the answer to that question is to ensure that they have protection when they hand over that money.
Yeah. Imagine I were a lawyer, and I'm not a lawyer, and I'm not giving legal advice, nor am I giving financial advice today.
Mm-hmm.
But if I were a lawyer in this case, I would be representing both parties, because I'm not just looking out for you. I'm looking out for both parties and the success of the entire deal, right? I'm looking at this from a perspective of, both of you hired me as an intermediary, as a mediator, in order to figure out what do we need to do to put this deal together to make it successful for both parties, not to cover one person's ass or the other person's ass. Mm-hmm. How do we make sure that this is successful? What's the best approach and structure to make sure that this happens? So the first question I got to ask is, if you're going to be doing a loan agreement, how is that one person protected? Yeah. Because they're the one giving all the money and then handing it to you. We need to have some sort of documentation or security in order to make sure that this is done properly, right? So I would be leaving a loose end by not asking that question. Yeah. The next question we should be asking is, and again, I'd be very careful about the terminology here, because there's two definitions of interest here. The other definition of interest is the interest that you're going to be charging, or that they're going to be charging to you. So how much is that interest? What is the yearly percentage or monthly percentage, however you want to structure it? Normally, people would do an annual interest rate. Mm-hmm. So what is that, and how much is that going to cost? For you, the borrower, how much is that going to cost you every year? And how much is that going to cost you every month, right? Because that should be taken into consideration with this deal. How much is this deal cash flowing, and how much are you obligated to pay to this lender every month in order to get this deal done? Mm-hmm. That might change whether you want to do this deal or don't do this deal.
Right.
Okay. The next question is, can you afford to make those payments every month? Can you service that debt? Because it is no longer a partnership. It is a debt, right? It's a debt that you have to pay every month. And is it sustainable for you? And so what I'm going to assume is that, based off of the limited information that I have, but I'm going to assume, just for today's example, that this is a long-term buy and hold rental property. Okay. Let's pretend that there's no renovations. Let's pretend that there's no value add. Let's pretend that there's none of that. You just want to buy this property and rent it out. Ready to go. You just don't have enough of the down payment, right? It's a very common occurrence in real estate investing. Saving up for a down payment is very difficult. 20% of anything in Canada is expensive. Yeah. And we know that most Canadians, it's very hard to save up, right? So how much is that interest going to be? And how can you afford, based on this deal and based off your personal income and your personal income and expenses, can you afford to make these payments every single month? You got to be asking that question. Yeah.
I like that you use the term sustainability. Is this sustainable? Because it's one thing, it's like you need to make sure that the deal works, right? But a lot of people will be like, oh, it's okay. It'll make it a little bit negative cash flow, but I can cover it. I have a good job. I can cover it. is that sustainable?
Oh,
So
God.
there's the risk that it creates on the deal itself, but then there's also the sustainability of you're saying you can afford it, you can cover it. What if things change, right?
I can't believe I'm going to do a tangent like this so early in the
Oops,
show.
Sorry.
I'm on the third of like 10 questions, and I just drew an arrow off to the side, and I wrote 4 letters. And the sad thing is that I have to tell this whole story in order, and
I can see the 4 letters on your paper, and I'm
You
like,
can see the 4 letters?
Oh, we're in trouble.
Okay. So what I want you guys to do is I want you guys to go and Google Epic Alliance today. And many of you, maybe 2 of you guys are going to know what Epic Alliance is.
Hands up in the live chat
Hands up in the live chat if you know who Epic Alliance are.
without Googling.
For those of you guys that don't, go ahead and Google. Now, the problem is that it's been so long, which hasn't been that long, but it's been long enough that the revolving door has gone around so many times in the real estate community now that anybody I bring up and ask, hey, do you know what Epic Alliance is? They're like, no, never heard of them, which is so sad because that's how quickly the real estate investing community recycles. That is how quickly, within a few years, that's how quickly that revolving door of like new people come in, old people go out, new people go in. And and that's how history keeps repeating itself is because nobody talks about this.
People don't know all the catastrophic.
I'm putting my neck out right now, even talking about it. I'm only talking about things that are proven. There are other people who have screwed people in this industry and in this community within the last few years that I can't even talk about yet because it hasn't made it to court and judgments haven't been done yet. So I'm putting my neck out on this one. But go and Google Epic Alliance because that's exactly what they did. They had a structure. And I don't want to go too far into this because it's going to reveal my answer on how to go about doing this. But Epic Alliance, they created a system where it was a hassle-free landlord program, I think it was called. Basically where you give the down payment and they will give you a fixed interest rate on that money that you invest. It's not they called it a partnership, but instead of giving equity or instead of giving a share of the profits, they just give a fixed rate interest, which was anywhere between 12 to 15%. Okay. So they were like, hey, we got great cash flowing properties. We'll just give you 15% returning your money and we'll pay it out monthly. And then we get to keep all the equity. And their whole thing was that we don't need cash flow. We just want to build a $1 billion real estate portfolio. And we want to benefit from all the mortgage pay down and all the appreciation. And they were on their way. And everything was working. Until it wasn't working. Because of what Gabby said, sustainability.
Or lack thereof.
There was no sustainability. And what did they start having? Cash flow problems. And when they couldn't make those payments and they couldn't make other payments, and then eventually the Securities Commission caught on to what they were doing and found out that it was illegal, which, I mean, they should have known that from day one that what they were doing was not legal. They got an order to cease. And when they were told to stop operations, well, they got no more money coming in from new people, which, by the way, that was the other thing. They needed new money coming in order to pay old money, interest payments. There's a term for that. Somebody can help me in the chat with what that's called, where you need new money coming in order to pay your old investors. And then the music stopped and they couldn't make their payments anymore. And then everybody lost everything. Not to mention the fact that they were buying crappy properties in Saskatoon, but there's a long story to this. But I saw this when they first started doing it. I'm like, this is not good.
Yeah.
Nobody wanted to hear me say it.
Mm-hmm.
Nobody wanted, and it was like, you don't talk about those people. They're saints. They're amazing. And I was like, okay, guys.
They loved them.
Oh,
when
my
the money was coming in,
God.
they loved them.
They were
the sweetest. They were the sweetest.
Holier than thou. They were they were saints.
Mm-hmm.
No, you couldn't say a bad thing about them. Otherwise, you would be put to the cross.
Mm-hmm.
It was terrible. And then, sure enough, it all happened. But the reason why I say all this is because I want you guys to know, like, you know, Gabby asked, is it sustainable? Can you pay those payments? Probably, right? But for how long,
Mm-hmm.
right? how long before, rents start dropping or interest rates go up or things like that? Things can change. So I want you to be sure that if you are going to go with this approach, it might work right now. You might have a great job, but what happens? Do you have a plan B, a plan C, a plan D if it doesn't work in the future? Because that can quickly change the integrity of this deal. That can quickly change whether you need, that could mean within days that you need to sell the property. And it might not be when you want to sell the property, which could mean a loss, or it could mean maybe you don't get all your money back out and you're not able to pay your investor back. Okay, so be very, very, very careful with this. It can still work in some cases, but be very careful. The next question that I have is, how are you going to pay them back? Right? Depending on how long the term of this loan is, do you have an exit strategy for paying these individuals back? Yeah. If this is just a rental property and you're planning on paying down the mortgage, getting appreciation, right, and cash flow, and you're making those payments every month, how are you going to pay that loan back, that down payment back?
Yeah. What's the plan?
You got to have a plan.
Yeah.
You got to have a plan. Okay. And lastly, on the topic of the offering a loan to your money partner or your friend, do you have another mortgage on this property? So are you just taking money from them to cover the down payment and you are financing the rest of the purchase? Say, for example, you need a 20% down payment. You only have a little bit of it. They're going to give you the rest of the down payment. And then you're going to go to a bank like TD or RBC or CIBC or BMO or something like that. And they're going to give you the other 80%. If that's the case, is that bank okay with you borrowing the money for the down payment? Mm-hmm. That's a very important consideration that you need to ask. And I know that sounds kind of obvious for most, but I understand that there are a lot of new investors who don't understand that. Maybe this is something that's never been considered or ever something that's ever been brought up. But most lending institutions, most banks, have requirements for where you're allowed to get your down payment money from. And you got to look into those requirements. Yeah. Again, I already know the answer to this, but rather than me just telling you, I'm going to teach you how to go about finding it yourself. So go and find out.
Things you need to consider. Yeah. And have you found the answer to them? Mm-hmm.
The sooner you go and get that answer, the sooner you're going to have the clarity of knowing what's possible. Mm-hmm. I don't want you to go out and start having conversations with your friend for the next 4 weeks and then finally get it all drawn up and then go and write an offer on a property. And then 2 weeks later, you find out from the bank, oh, that money is not eligible. Yeah. We just wasted time. I don't want you to waste any time. I can tell you right now for free, real simple, real fast, and I want you to verify this though, that no major lending institution will allow borrowed funds for down payment. So that's going to shut this down right away. That's going to shut it right down. But maybe you're not using a major lending institution. Maybe you're using a private lender for the remainder of the 80%. And if you're using a private lender and they don't have those rules, or using a credit union and they don't care about those rules, then perhaps maybe it is possible, right? It really depends on, again, many, many, many different parts of this deal. I need to know more about this deal in order to be able to provide the right coaching and guidance. But I'm telling you right now, here's what I don't have, which I would need in order to answer this question for you. And if we were on a one-on-one coaching call that you paid for, or you were in our mentorship program in REI Masters, these are the questions that I would be asking and getting the answers to in order to formulate the proper answer for you. Okay? Now, let's talk a little bit more about a partnership. We've been talking about doing a loan, and the questions that I had originally were about, whether what kind of questions I would have for if you were to do a loan. But for a partnership, these are the questions that I would need answered in order to figure out how to go about answering it. First one is, you said they're your friend. Are they your good friend?
Why are you asking this? Why does it matter?
Well, how long is this deal going to be? Going back to the earlier one, how will you pay them back? I'm like, what's your exit strategy on this? Are we talking about borrowing this money for 6 months? Or are we borrowing this money for 6 years? Mm-hmm. Or if you've been following everything that I've been talking about and what we've been talking about on the show about doing it right and planning for success, I would recommend a minimum 15 years of holding a property. All of my joint venture partnerships are a minimum. I do not accept anything less than 10 years. Yeah. How good of a friend are you guys? Have you guys been friends for 6 months? I just want to know, do you know them well enough to know that this friendship is going to last, and that this friendship, you can feel comfortable being in a partnership with them for 10 years minimum? And if it's not, then maybe you should build on that friendship a little bit more, or identify some of the things that are, identify the reasons why you're questioning the sustainability of this friendship as well. If you feel like, I don't know if this friendship's going to last, I would ask you why. What are the reasons why you're questioning it? And can you work on those items, repair them? How long would it take to repair them in order for you to feel confident in answering that original question of, how strong is this friendship, and do you feel comfortable with moving forward with 10 years of this partnership, right? So if it's a no, I would ask why. Let's go back to identifying all those reasons, and can we spend the next 6 months working on that, or the next 6 years working on that, to get us to a point where we feel comfortable doing a 10-year partnership.
Okay.
Right? But if you don't feel comfortable with it, then I don't think you should do a partnership. There's a lot of trust involved in there.
I talked earlier about it being a perfect marriage, right? It's the marriage of two people, and not just in that you've pooled resources, but also that you're kind of, I don't like to use this term, but I'm going to use it, stuck together.
Yeah,
it's a long period of time.
Agreement.
For a long period of time, right?
It's easier to get out of a mortgage. I'm sorry. Edit that out. It's easier to get out of a marriage. It's easier to get out of a marriage. And getting out of a marriage isn't very easy. I think it's easier to get out of a marriage than a business partnership, personally. A lawyer might disagree with me. But seriously.
Maybe some opinions on that, but yeah.
Seriously, though.
Yeah.
I think that a marriage ending would be a little bit more amicable than this type of partnership on a brand new friendship that decided to get it in, with all this money involved, and it's going to get messy. That's my personal opinion on it. The next question that I would ask is, how long do you want this partnership to be? Which I've already kind of talked about.
Yeah.
Right? How long do you want this partnership to be? And, do you see success in this? The next one would be, who is responsible for what? In partnerships, there's so many different elements to it. And all of our partnership agreements are minimum 20 pages long. I can't remember exactly. It's 20 to 30 pages, something like that. And it goes through every possible thing of who's bringing what, who's responsible for what happens if this happens, what happens if this happens, and when does it end? And how does the disbursement, so how does the termination of this work? In what circumstances can it be terminated? What's the actual maturity of this agreement? How long is it for? Say 10 years. How does the money get paid back, and how do the profits get split out upon termination or ending of this maturity of this agreement? That all needs to get figured out. But who's responsible for what is really important? Because as I mentioned earlier, I like you very early on, did not want partnerships because I didn't want other people involved. I understood what I understood. I was the one that paid for my education. I was the one that paid for coaching. I was the one that had spent all this time learning everything. I don't want somebody else in there who doesn't have the knowledge that I have, who hasn't paid for the coaching and education that I have, coming in here and telling me what they think they should do. Right? If you want to be a part of the decisions. You go out and you get that experience. You go out, you pay for all that education and coaching, and then you can come and talk to me. But I knew what I knew, and I knew what they didn't know, and therefore I did not want to partner with someone who was ignorantly going to disagree with my decisions. My decisions are educated. So that's why partnerships to me are like, no, not a chance, right? Unless I had total control. And that's how I do my partnerships. And that's how I explain it to my investor partners, is that you guys are completely hands off. And if that's what you're looking for, this is perfect. But if you're looking to get involved and you want to do this and you do this, I'll do this, we'll split, not interested. That's where disagreements stem from. And disagreements turn into, debates turn into disagreements, turn into hostility, turn into bad breakups. We need to make sure that this is going to be sustainable. It's going to last the full 10 years. The only way to do that properly is for there to be trust in both parties, trust in you as the expert from your money partner to be like, hey, they're responsible for making all the decisions because they're the ones that know what they're talking about. And I'm going to let that expert do what they're good at. And that's how our partnerships are structured. We let our partners know. Here are the thresholds, the dollar amount thresholds. If it's over $3,000 or if it's over a $5,000 expense, yeah, I would need to come to you and ask you to verify that that's okay. Otherwise, the day-to-day operations of this business are completely Wayne and Gabby. And that's how we keep away from debates. That's how we keep away from disputes. That's how we keep away from bad breakups, right? And if there isn't trust, there isn't a strong enough relationship there for that trust, then we shouldn't do it.
Yeah.
Which leads back to my second and first questions. This is how we structure it properly for success, right? Don't just take anybody's money. It's been the most valuable part of today's episode. Just because someone's got money and they want to give it to you, don't just take it blindly. Okay? Because you got 10 years ahead of you worth of potential disputes and debates that could turn into messiness. And the last part last thing I'll ask is, can you both qualify on the mortgage? If you're going to do a partnership and they're going to bring the money, are both of you guys going to be going on the mortgage? Because there are some technicalities there. If both of you guys are going to be bringing the money into this deal, do be aware that both of you guys would need to be on the mortgage. Can you both qualify for the mortgage? Have you talked to a mortgage broker or your accountant about, this would be my last question actually, this would be the 10th question, sorry. The last question is, have you talked to a lawyer, mortgage broker, and an investor-focused accountant about what will happen if both of you guys are on the mortgage? Because there's 20 other considerations in there as well. I'm giving you a very simple answer today, but do know that if you are in our mentorship program, there would probably be significantly more questions because there's significantly more things to consider. And this has come through experience because we know every action has a reaction. We know that if you do this, you have to consider all of these things, right? But I'm just saying it, and I want you to write it down, that if you're going to do something like this and you're both going to be on mortgage, know that you are triggering other things that might not be in your best interest. Okay? I'll leave it simple like that. But those are the 10 questions that I would ask. Minimum. Okay? Now, from this point now, where we're at right now, Gabby, based on how I've asked those questions and based on how I've spoken, and feel free to let me know in the chat as well what you guys think. I've tried to remain as balanced as possible.
As neutral?
As neutral as possible.
Okay.
Have I seemed to lean in any direction? Give me an honest answer.
No. I'm trying because I know how your brain works. I know where
you automatically know
goes.
the answer.
Yeah. So I'm trying to be like, okay, I know nothing. I think you've remained pretty neutral.
Okay. And I've tried to. I've tried to.
Yeah.
I've tried to remain neutral while still highlighting all of the necessary considerations and questions that need to be brought up. Okay. And I don't want to lean towards, as a coach, and I've through this whole journey of real estate investing, I've also had to learn how to be a coach. Just because I'm smart at real estate investing, just because I know where the best opportunities are, I know how to structure deals, I know how to put okay, based on all this information, this is how we should do it.
This is what you should do.
To get to this point, I do agree that I know what I know, and I'm very, very good at what I do. But just because I'm a good real estate investor doesn't mean I'm a good coach. Right. And I've had to learn how to become a better coach, because just giving you the answer is not the best way to coach, right? If you want the answer, I mean, technology just keeps on getting better and better and better. I mean, ChatGPT can probably give you 90% as good of an answer as I could. And it's probably ChatGPT is probably pulling from information that I've said on the internet. That's why it's so accurate, right? So, I mean, and it's only getting better and better and better every day. I mean, 6 months from now, this podcast could be completely obsolete, because all the answers that you need could be somewhere in some AI platform, right? However, good coaching requires context. And good coaching requires the coach to look at the situation and look at the individual and tailor the question specifically for them. And this is what I was talking about earlier. I don't just give blanket answers or default answers. I really want to know about you and where you are and where you want to be. Mm-hmm. That's way more important. Yeah. Why I hate when people say, you got to do this strategy. You got to do this strategy. This is the only strategy. I'm like, shut the fuck up. People spend so much money being looped into that, or being, it might not. It probably isn't.
Funneled into a path that
one particular
they just
thing,
want to. Yeah,
but it might not be what's right for you.
Yeah.
Right? That's why, like, you are way more important in this equation than anything else. Right? We got to figure out what the actual outcome or solution is for you. What is the actual result that you are looking for in order to figure this out? So that's why I've tried to remain as neutral as possible, even though I know that with a high degree of certainty that I know what's best for you. I'm still going to give the benefit of the doubt, and I'm going to ask all these questions just to make sure that there's not something missing, that I'm not providing bad coaching. Mm-hmm. I've left the door completely wide open, though, because I don't have those answers. Mm-hmm. But I've tried to remain as neutral as possible in order to give you the best possible coaching. Okay? I want you to know that. I think it's important to highlight this. Now, through my experience, though, and having done many, many, many deals, and through coaching many, many students, and through watching thousands of deals in our community, I gave you one example of one clusterfuck. I have hundreds of really, really bad stories. After watching thousands of deals in this community, what I've learned is that doing loans, in this case, this type, rarely work out. Rarely. What I tend to see is I see very amateur new investors trying to do this for the same reasons that we've talked about today, for the same ignorant reasons of, I don't want to do this, I don't want to do this. And again, I understand. I understand why they feel that way or felt that way. I understand what got them to that point, because I was there too. But I was also there when I was still green and brand new. And most of the people that are doing it, like I said, are green and brand new. And they rarely work out. Now, I have given some of the reasons for that, but what I think, and I'll get back to that in a second, I'll explain why. Loans typically work much better for shorter term deals, value add deals, like BRRRR deals, value add multifamily, which is like multifamily BRRRRs, and fix and flips. If you're getting in and out in less than 2 years, then you can justify paying higher interest for the money because you have an exit strategy, whether that be selling the property for profit or refinancing the property and getting the money back out. And that's a way to get your investors' money back. And if you're only using it for a short period of time, you can justify that high interest cost, right? And as I mentioned earlier, I implore you to compare. Okay, what if I give 50% profits compared to what if I pay them 15% interest?
Math.
Compare that to figure out what makes the most sense from the profit perspective. But from the risk perspective, as I mentioned earlier, your ability to service that debt on a yearly or monthly basis is very important to determining whether this is increasing your risk. And more often than not, you are dramatically increasing your risk because you are dramatically increasing your amount of debt you have to service every month. And if you're paying high interest on this money, if you have any cash flow, and most people have little cash flow because they don't know where to find it. If you have any cash flow, it's gone. It's gone because those interest payments are very expensive. Even if they are only interest only, it is very expensive. And the reason why I recommend that you do a partnership, the biggest reason is because, as Gabby mentioned, sustainability is not very good. Even if you're able to make it work, one bad thing happens that's outside of your control, and it all caves in.
Yeah.
And there are so many bad things that can happen. So many bad things. So for doing a turnkey buy and hold property, I don't like saying it, but don't do it. Just don't do it. Go and verify. I'm just some guy with a microphone that likes to talk for an hour every morning. Listen to me for months, years, and then you will see the validity of our experience and our expertise. Yeah. Okay? But if you're new to this show, don't just take my fucking word for it. Go and verify. Trust me, but verify, please. But if you trust me, don't do it. Please, for the love of God. It is incredibly unlikely. And I'm going to give an example. We're going to go a little over on time today because I haven't.
Black and white.
Yeah. But I'm going to give an example because I'm going to talk about the deal that we're buying on Thursday, which is a great cash flowing deal. Some of the best cash flowing deals that anybody could possibly get in the last 20 years. Okay? It's a deal that I'm doing that's fucking phenomenal. And I'm going to show you I'm going to show you an example. And just give me a minute. But I want to say that before I get into that, I just want you to know that if your concern about doing this is because you don't want to give up half the profits, just run the math and look at the comparison and then do a risk analysis. Okay? And look at all the potential things that could go wrong with this deal. The safest approach is to do a partnership. Yes, you are going to give up half of your profits. But think about this. If you don't do this deal, you're going to get zero profits. Okay?
Which is the third option.
Yeah, that's third option. You can just sit there and I don't want to. Yeah, you're going to get half the profits, but I want you to change your perspective on this because I think that you're looking at this in a very negative lens. And I want you to look at this from a positive lens, from the eyes of an entrepreneur and the eyes of an experienced investor who knows how to scale portfolios. If you changed your perspective on this and you looked at partnerships as actually a blessing instead of a curse, or a blessing instead of a bad thing, because you're looking at it like, I don't want to give up half. Just imagine you loved partnerships. Look at the possibility and opportunity with partnerships, because it's not just this one deal. It's so many more deals. You're looking at this one deal and being like, how do I squeeze as much out of it as possible? When you need to be looking bigger picture. yeah, I'm going to give up half my profits. But if I continue to keep doing partnerships like this, how many deals could I do? You're just looking one-dimensionally at this one deal. I want you to look big picture. If you want to get to 10 or 20 or 50 properties, you're going to need partnerships. And if you had 50 properties, they were all partnered on, are you going to look back at the first one and be like, oh, I really can't believe I gave up half on that one? Mm-hmm. It's going to be a drop in the pond. Yeah. It's going to be so minuscule compared to what you've built. And I need you to think more successfully. I need you to think like a successful real estate investor, like an entrepreneur, and look at the possibility. And when you change your perspective, you're going to realize this right here, this first deal, this partnership is a stepping stone. To significant success. Mm-hmm. Because this first deal is going to lead you into your next deal. This person, this friend, might have more money. And what if they say, wow, this went great. Let's do another deal. Or another deal. And what if they have a friend who has some money as well, and your friend tells their friend about you and how amazing you are and what you're doing for them? Could that lead to more deals? Yeah. And what if you are sharing your whole experience with all of your other friends and all your other family, and they see your successes? They see that it's possible to partner with you and to benefit from half of the profits on the deals that you're doing because you're so amazing. And what if they see that success and they reach out to you, like this partner did to us, and says, to be honest with you, I just like to give you the money and you do everything. Just imagine the possibility of how much this could grow. This is how you scale in real estate. You do not scale by saving. You do not scale by doing the BRRRR strategy. Those are all very incredibly slow and risky approaches. The proper way to scale and how successful real estate investors scale is they do it through partnerships. Strategic, calculated, and smart partnerships with the right people. And if you learn how to do it properly and you learn how to do it with the right contracts, with the right people, and I express this I'm going to highlight this, it's very important. Legally, please make sure you do it legally as well. You learn all of these things. The sky's the limit. The sky is the absolute fucking limit. You can do whatever you want. If you know how to find great deals, like we do, you can do as many as you want. Okay? I did promise I'd do a little bit of math. I'm going to do it really fast here because there's a really cool example. I have a real world, real life example for you here today, and then we're going to wrap up today's show. Okay? So thank you for staying to the very end. Bonus. This property that we bought, let's just round up. Let's assume that this property that we purchased, that we're taking possession on Thursday, if this were a $200,000 townhouse, 3 bedrooms in Edmonton, okay? And I told you earlier that it cash flows $500 a month. What would the 20% down payment be on this $200,000 property? It would be $40,000. $40,000, right? 20% of 200?
Yes.
Okay. I need $40,000. Do I ask my friend to loan it to me, or do I ask my friend to give it to me and we partner? Let's say I decided to do a loan instead. And I talked about this earlier. I'm going to say it again. This is one of the best cash flowing opportunities in the last 20 years. If you go and purchase my book, The 5% Rule, and you learn about cash on cash returns, and you learn about how to figure out how much is a good amount of cash flow based on the price of the property, the cash on cash return on this property is the best that anyone has seen in the last 20 years. Okay? Mathematically. And if the best cash flowing property with the best cash on cash return in the last 20 years is $500 cash flow, if I were to take a loan for this $40,000 instead, because I wanted all the profits to myself, I want all the equity pay down from the mortgage, I want all the appreciation because I know the value of this property is going to be going up, and I know that the money that I'm making from mortgage pay down is fantastic. If I were to take a 15% interest loan instead, can you tell me, guys? And I'm going to slowly say this so you can do the math while I'm talking. I want you to grab your calculator and figure out $40,000 at 15% interest. What is my yearly interest cost? For those of you guys that don't know how to do this math, it's 40,000 times 0.15.
6,000.
If you've done the math now and you've heard Gabby say it, the interest cost is $6,000 a year. What would that be per month? How much would I need to send to my friend every month for interest-only payments?
$6,000 divided by 12 months.
$6,000 divided by 12 months. Can anybody tell me what that is? That number is $500 a month. Does anybody remember what my cash flow is on that property?
500.
It's $500 a month. Wow. That really worked out perfectly. If I were to borrow that money on one of the best cash flowing properties in Canada in the last 20 years, I would be breaking even on cash flow. So in the best case scenario in the last 20 years, I would be breaking even. So I'm willing to bet that if you guys aren't doing what I'm doing, and you've been investing in the last 20 years, or you're investing today, and you're not following what I'm teaching, and you're not part of my mentorship program, then I'm willing to bet that you would be in a very negative cash flow situation. But even if you are following what it is that I'm doing, and I'm teaching you for free today, I'm literally telling you exactly what to go and buy. It's the best cash flowing opportunity in the last 20 years. I'm giving it to you for free coaching. Even if you were, you would be breaking even. One thing happens to you. One thing goes wrong in your deal. One thing you don't do right. If you're not under our tutelage, if you're not being coached by us, there's a very good chance you're going to miss at least one thing. You're going to slip up. There's no way you're gliding through this next 15 years without making one mistake. One thing goes sideways. You are suddenly in a negative cash flow situation, and you may be in a position where you need to sell. And it may not be the best time, and you may lose money. You will lose money. This is why I say that there are very, very, very few circumstances where it makes sense to borrow the money for the down payment. Even if you answered all of my other 10 questions properly and it made sense for you, the level of risk is just not worth it.
Yeah.
This is why Epic Alliance went upside down. This is why when I looked at it, I'm like, this is bad. Because they were raising so much money and they were so incredibly popular. And that's why it went so poorly. It all caved in. And I don't want that to cave in on you. So if you trust me, if you trust us, then consider partnerships. But please, just because you've now figured out that partnerships are better than loans for down payments does not mean that you are fully prepared. There are so many other elements that you need to understand to do properly and do it legally. So please take all that into consideration, okay? I hope that this answers the listener's question. I mean, I couldn't have been more thorough. I couldn't have been more thorough with the 75 minutes that I had. Okay? I hope this helps you. And if you need any additional help, you want to go through the numbers of your deal, or you want to have a conversation about how to structure this properly with your friend, you can feel free to book a paid coaching call. You can get that through our website. Okay? You can book we can analyze deals with you. If you just need a singular 1 hour just to talk, you can pay for it. It's on our website. I'm not trying to pitch you. I'm just saying that there are so many other things that we won't be able to get into. I'm probably going to tell you to take a joint venture course, which is probably going to cost you $1,000, right? The smart thing to do for anyone else is to join our mentorship program. This way you know that we will guide you through every single step, and you have us holding your hand through every single step throughout the process to make sure you do not misstep, to make sure you do not slip. There are so many opportunities for you to slip. It's unbelievable. And I don't, as much as I can provide you here, there are limitations, and I'm not there with you every step of the way. Yeah. Our students are able to ask us questions any time of day, and we answer those questions. So they rarely misstep. It's almost impossible for them to misstep as long as they ask.
And follow through with the advice.
And follow through with the advice, of course. But you know what I mean? So there is value in having that guidance and having that access to us whenever you need it, to going through those deals to make sure you don't miss anything. I promise you. The value is there. It's up to you on whether you see the value in that. Mm-hmm. It's up to you and whether, you want to make sure that this is successful. But I assure you that if you get the right guidance and the right education and the right coaching from us, other people will see the value in you. Because right now, you may not have that much value to offer to others. You're thinking to yourself, why would someone ever partner with me? And it's a valid question. What do you bring? What do you offer? If you knew all the answers to everything, if you had all the resources that you needed, the team, if you had all the know-how and you knew where to find the best deals, how to secure them, and how to exit them properly, how to structure them, you would suddenly be valuable. And people would see the value in you in giving up half of the profits because they know that they would have that level of assurance and certainty of knowing that this deal is going to be successful. If you can't guarantee that right now and you don't have that value, then nobody is going to see that value in you. So continue to keep listening to this podcast every day and asking great questions and taking advantage of the free resources, or reach out to us. And if you want to take it to the next step and you want to do it faster, reach out to us. We can help you decrease that learning curve and get to a higher level of intellect and a higher level of expertise faster so that you can start utilizing joint venture capital and scaling your portfolio. Okay. I hope you guys enjoyed that. Listener, thank you so much for sending in your question. We really, really do thank you.
Yes.
And we hope that you got value from it. If anybody else needs any help, please, we're here every morning. We're here for you guys. Anything you need. Just send your questions in or join us live. We'll see you guys tomorrow morning.
Have a great day.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.